The Indian market outlook for this year, it's a market which is already in correction and things are likely to get worse?
I should think so. I mean, this is the only way an irrational exuberance period would tend to end. I mean, if you look at the brass facts, over the last 5 years, India has added 130 million new investors. So since the dawn of time till 2019, the aggregate number of investors was 40 million. We've added 130 in the last 5 years. And these new young investors have only bought whatever's cheap. So they've bought a lot of small mid-cap and a lot of the state-owned enterprises. What we are seeing with the IPO frenzy is the fag end of that irrational hunt to get rich quick. And when you can't find any more cheap stocks in the secondary market, you obviously go to the IPO market and buy something ab initio at 10 rupees or $10. So you think you're getting something cheaper, you're getting in at the start of the journey, and that psychology won't last very much because, as we just saw, since September, markets have corrected about 10%. 1 year returns in Indian equity markets mirrors that of the fixed deposit. I would imagine in the next 2 quarters, this quarter and the next, we should see some bloodletting. And
so let's talk about that bloodletting, right? You talked about the 2 overvalued sectors, I think, in the Indian market, small mid caps and also state-owned companies. Are they going to be the ones that give first?
I should think so, yes.
Yeah.
I mean, it's a combination of factors. 3 quarters in a row, Indian GDP print has trended lower. 3 quarters in a row, corporate earnings have trended lower, and the markets have reflected that by correcting. Sooner or later, the young people will run out of steam. So the SIPs that have been averaging about $2 billion a month, that's going to start coming off because you don't see the returns anymore. The incentive is missing. 1 quarter or 2, you'd go into IPOs, still driven like lemmings, hope rather than reality. And beyond that, there's a degree of carnage.
Yeah. Oh, dear. Goodness.
So infrastructure, at the tail end of last year, we saw the fallout from the Adani scandal. And I'm just wondering, Praveen, has that all been priced and has the market largely moved on from that? And does infrastructure present an opportunity still?
It's a continuing narrative which unfolds over multiple years. But for the moment, expecting a significant infrastructure recovery trade, I think, is a bit ambitious. Because the government is really focused on de-stressing the lowest strata of the society, which is experiencing significant inflationary pressure on the core segments of the CPI, which is food and beverage. And giving out subsidies or direct benefit transfer is really the order of the day. So the government hasn't launched back into capex despite having political wins in 2 of the major states. The focus really is on cash handouts so that consumption kind of picks up again, and that doesn't trail off.